it's you need to be careful with that in Nigeria. So while there are applications like Bamboo, UBA, Meristem, Chaka, Trove, all these applications allow you buy and sell stocks. They do ETFs. A lot of them do ETFs as well. Um, if you want to be in and out of the market quick, be careful that these are probably not ideal tools for doing that. What you don't want to do is get into a trade and you have, say, T+1, T+2, which is like a day, 24 to 48 hours to execute your trade or settle your trade or your purchase, and then you're trying to sell out in 15 minutes, because you've seen a market movement. Also, so I think it's important for people to bear in mind that I call it investing. You're buying Tesla stock because you have a longer term view. So, you want to hold Tesla for 3 months, 6 months, 1 year onwards, versus somebody who is actively speculating on what's going to happen to Tesla once the earnings announcement is made. So you need to look at the right application for doing each of those activities.
So what's your advice on? So, for example, I'm hearing this stock is good. Yes, I want to buy this stock. What do I need to sort of look at before I buy the stock? Can you help clarify? Or what do I need to know?
What do you need to look at? I would say the first thing you need to decide is, are you short-term trading or are you long-term investing? Depending on where you live, say if you live in the US, for example, there's something called a Pt2, and there are rules in the US, for example, that limit the amount of times you can buy and sell a stock. So I think if you do more than 3 trades in a week, or 3 transactions. So a buy is a transaction, a buy and a sell, a buy and a sell. Now, that's one of the things you need to consider. Am I looking to hold this thing for 2 days, 1 hour, or am I looking to hold it for 6 months, 1 year? Because
maybe
you consider will differ depending on what you're looking at.
Okay. So what about the company itself? So, for example, people are buying Tesla stocks now because they're hearing it's rising by a lot of percentage. And what are the factors I need to look at to be a good investor before I buy a Tesla stock? Guys, can you mute the phone?
Okay, so speaking of...
Sorry, I'm muting. Yeah, go ahead.
So if you're thinking about it not from a trading perspective, which is more the short-term view, and a lot of the time the short-term trader does not really care much for, the fundamentals of the company. So, you have a rise, like Tesla has been rising recently. A lot of short-term traders just want to catch that rise, ride the wave, like Kodak in the last week or so, ride the wave, get out, profit. You don't really care much for what the company is and who runs the company.
But what if you want to go the long run?
Right, if you're looking at the long run, there are a number of things that you can look at, and it is very subjective. People are different. People care about who runs the company, the CEO, the management team. Is it a solid management team? What has their performance been over time? So you get things like PE ratios, and people use these figures differently, or what are the number of things you need to see to make you comfortable that this company is sound for you to keep your money in for 3, 5 years, or long term, 10 years, 20 years. And an example of how subjective it is you look at somebody like Warren Buffett, right? He typically will go with a sound management team. So you look at Coca-Cola. The stock price never really makes any significant move, but that also means that, they're never losing money on that, and they get a decent dividend, and he's happy with that. Whereas some other people, some other younger fund managers, stocks like Tesla, where you have this vibrant, risk-taking CEO who can do great things and make your stock move because, when stocks are moving, people are making money, and I guess some are losing money as well. So unfortunately, there is no set list of things to look at. It's not like a checklist where you say, oh yeah, if you look at these 5 things, you can then make a decision. If you look, there are these things called scanners. What is it? FinViz is one of them. If you look at finviz.com, and there are just a whole number of metrics on there that different people use at different times. And what I would say is, if you pick a stock and you look on FinViz, for example, you can use a website like Investopedia and start getting an understanding of some of the meanings of those metrics.
Okay.
But to narrow it down, I would say, if you look at the earnings calls for a company that you are interested in, a number of those metrics will be mentioned on the earnings call. So, for example, dividends, PE ratios, and things like that. When those are reported, you can start from those ones, because a lot of investors will use that information from an earnings call to decide what they want to do.
Okay, so payments of dividends and so on.
So listen to the earnings call of the company, or get the information of the earnings call from the company that you are interested in, and look at what the metrics that were reported in there are, and read up about those.
Okay. Thank you, KB. Any questions on this, guys? Any one more contribution, 2 or 3 more questions on this? Does anyone have any questions regarding stocks or what we've said so far? Anyone? If you do, just unmute your phone.
Yeah, Samson, hi. Tosin.
Hey, Tosin, how are you? Please introduce yourself.
My name is Tosin Taiwo, medical doctor, very big novice in investment, learning from all the bosses like Chibi and the rest on the group, and Razak. Razak, thanks for the top up. Just wanted to quickly, I think, just put things in context. There are a lot of people that are looking towards this call, and really they need guidance on investment. So just quick signposting signs. Number 1, if someone needed to get, because from what all I'm hearing here, the baseline I'm hearing is you will need to be financially literate and know your terms. Terms have been thrown around, ETFs, PE ratios. There are a lot of people that don't know those terms. Thankfully, because I've been listening to you guys, Chibi, what's his name, Ayo, that is not here now, I've kind of picked up on those terms. In the medical field, I really don't know this thing. So first question is, where can we go to get a solid education? What are the 3 recommendations they'll put out there? I know there's Investopedia, but what are the things you would recommend? Just take yourself, Razak. When you started off, can you put us in your shoes? What did you go and read? Just give the 3 signpost things that people can go read up on and start getting the basics. Because technically, we are probably not going to get everything from this call, but at least signposting us to those things will probably be the first step. Thanks.
Sure, no problem. Hopefully everyone can still hear me. I'll come in and I'll tell you a little bit about my journey and what I think people can do as, like you said, the kind of the markers, the milestones on the way to becoming, a successful trader or investor. First things first, you need some form of financial education. I'm not saying go get an MBA or anything like that, but you need to understand at the very least the terms that people use when they discuss anything related to trading or investing. You need to understand the things that most people are looking at when they talk about these things as well. So first things first, I would say you have to understand there's broadly, and I'm sure people could correct me, there's 2 ways of kind of understanding the markets. That's based on fundamental analysis, which looks at big picture macroeconomic kind of indicators, and then technical analysis, which is looking at a price chart of whichever security, equity, commodity, forex pair you're looking at. And there's a way to analyze that and understand that as well. There are traders in the world people like Warren Buffett, who base everything on almost fundamental analysis. How good is the company? What's their earnings like? What's the trajectory? Number of, this is just data and, stuff that you can find in any kind of earnings report or company's investment kind of information on their website. And there's technical analysis, which is looking at a price chart and understanding what that tells you. And those are the things you need to learn. Have some understanding of what fundamental analysis is. Have some understanding of what technical analysis is. Depending on the kind of trader you want to be, and this is something you will hear a great deal and used to frustrate me when all I wanted was just an answer, this is how you do it. But what you'll find out, and it's actually true, is it depends on what you want. It depends on who you are. It's all about what works for you. There are traders who don't believe in technical analysis and think it's mumbo jumbo, and they just believe in fundamentals. And there are people who are the opposite, who, like myself, basically don't care a great deal about the fundamentals other than very broad strokes, big picture of what's happening in the world, and only care about what price tells them. Because what you'll find when you do start trading is bad news will come out, but the price will go up, and you don't understand. It's like now people are looking at economies are in recession, people are losing jobs, yet the markets continue to, in fact, some of them are nearly at all-time highs, which makes no sense whatsoever. And that's something you must bear in check. So I'll recap. Get some understanding of what you're dealing with. Second, once you understand what fundamental analysis and technical analysis is, you need to find the best kind of sources or reliable sources of information which work for you. Again, some people might like one website or platform over another, and what it really takes is a bit of trial and error on your part. I say start with the most popular, read Bloomberg, CNBC, watch the business magazine shows on CNN and so on, and you start to understand, you see the terms being mentioned, you start to see the same thing is coming up, and you start to get an understanding of what broadly a lot of people are using. Once you have understanding of that, I would say, and you feel like you're ready to trade, open a demo account with a broker. People say, which brokers are the best brokers? Again, this is where it comes, whichever one works for you. Over time, you will find what works best for you. I suggest going, again, with the most popular ones, start to use them, familiarize yourself with the platform. But over time, you'll realize after you try a couple, what things you're looking for. Some platforms are, web-based and are easy to use, and some are a little bit more clunky, but maybe you don't care about that. You just want to be able to click buy and click sell, and you want it easy to hand. And some, maybe you want to do all your analysis in their platform and it's very good, whereas in others, it's not very good. I use something called TradingView, which is a free platform, and I use that for my analysis, but I don't use that to actually place my trades. And the reason for that is in the UK, unless you're considered a professional trader, the margin requirements, again, something which you come up again, which you understand when you start trading, the margin requirements are much higher. And so I have my money in Australia where they don't have the same rules. And it means I can I can risk more money with less margin required. And I'll just touch on what margin is. That's basically almost like, let's call it like a holding deposit to say you're good for it in order to place a trade. So once you've got your understanding of fundamental and technical analysis, and you've got yourself a demo account, now you start trading. Now, how do you start trading? Yes, you click buy, yes, you click sell. But first, you need a strategy or a system. Again, these words are kind of analogous. People use them interchangeably. But what you need is a system. Now, a system or strategy for trading, honestly, can be as complicated or as simple as you like. There are some people who use various indicators and studies, the MACD, this, the moving average, that. And again, when you look on Bloomberg, CNBC, or read certain articles, you will see those terms come up. But honestly, when I say trading can be as simple or as complicated as you want it to be, it could be as simple as I buy on a Wednesday and I sell on a Friday. And I will honestly tell you, there are people who've done this and run, statistical testing, and you often find sometimes those kind of strategies, whether it makes sense or not, will work and will make money. I've seen one where people have looked at what the day is today and what it was the previous day, and we'll just go up. If the day that was, so if you look, today is Saturday, the 15th of August. People look at 15th of August last year. And for example, if that was an up day, that is the market closed higher than it opened, they would look to sell. And again, people have done studies that show that can work. So honestly, strategies, there's a million ways to trade. You have to find what works for you. And again, how do you know what works for you? It will be trial and error. As I said right at the beginning of this call, you are likely to lose a fair amount of money when you first start, especially if you're going short term. Maybe for investing, you can ride the whipsaws in the short term ups and downs, and you may be not as bothered by that. For certainly myself, who's a little bit more short term, you will lose some money as you start to understand these things. But it's okay. This is all part of the process. Demo will teach you how to use the platform, but it will never replicate the feeling of putting real money on the line. And when real money is on the line, you'll find your behavior is very different to when it's not on the line. So I think those things will kind of get you the basics. Some are understanding education, some practice, and then you got to put real money on the line. And also, when you do put real money on the line, the last thing I'll say, because I think Samson wants to cut me off, is whatever your system is, whatever your strategy is, you need to do some form of testing, whether it's back testing or forward testing. If you don't know what that is, again, these terms will come up, but ultimately, you need to understand that the strategy you're trading has a probability of success. That is a positive expectancy. That is that it has been proven in the past, not that past performance means anything in the future, but it does mean if it was successful before, it's more likely to be successful going forward, that strategy more often than not will win. That is, you will have more money than you started with over a set period of time. If you have that, it will give you the confidence you need to continue to trade your system or strategy when times get tough. And there you go. I can share in the WhatsApp group links to some very simple resources to get you started. But I'll also, of course, always say, do your own research, do your own due diligence. And it's often better to come after doing your own research, asking more pertinent questions and much more general questions, just because it means people like myself or Chibi or whoever else can be a little bit more specific with the answers you're looking for. I'll stop talking.
Awesome stuff. One more question before we move to the next agenda topic, because does anyone have a question? And if the answer can be just more brief, that'll be awesome, just to keep it with time. Does anyone have any questions? Okay, awesome. So moving to the next agenda topic, just bringing it out. Yes, agriculture and investment in Nigeria. So there's this big thing on investment and saying agriculture is the next thing in Africa, especially in Nigeria. Does anyone have any light on this? Can anyone explain if it's something people should go into, and how can someone do that? And are there other investment opportunities that we don't know about? Feel free to join in. Feel free to say something.
Okay, hi Samson, this is Ibe again. Okay, so
hi Ibe, how are you?
Fine. Okay, so I think let me just touch on the second part of that question first regarding the other. Was that on the other investment opportunities, correct?
Yeah.
Okay. So in the Nigerian market, there are quite a few options. There are quite a few investment options that are available.
Even not just in Nigeria, the African market. So anyone
Sure,
who knows
absolutely.
of investment, just share. Yeah. Okay,
right.
Go ahead.
So okay, there are two ways to look at this, and I think Razak has really touched on a healthy bit of the investment landscape, right? But sort of at the beginning of the journey, right, you have investments that you can make, or fixed income investments that pay an interest rate, these are non-equity type investments. So you have your commercial papers, you have your bonds, you have your treasury bills, you have your fixed deposits as well. On the fixed deposit part, what you have is that for a lot of people who want to just put some money for 30 days, 60 days, the first thing they do is, pick up the phone, call the bank and say, look, what's your rate on 30-day, 10 million, 1 million, whatever it is they want to put in, But there are also other institutions that also offer fixed deposits, not just the banks, the deposit money banks. So you have the deposit money banks, those are the GPs.
So what's a fixed for So look at us as novice. For novice, what's a fixed deposit? What's that about?
So really, a fixed deposit really is just a way to put some money in a bank and get a higher interest rate than your savings account would give you, right? So all the banks, most of them anyway, pay an interest rate for a savings account of something about 3%, and it comes down to about 2% net of withholding tax on the monies that you put in your savings account. For a fixed deposit, you're saying to the bank, look, take this money and hold it for a minimum of 30 days. So you can trade with it for 30 days, 60 days, 90 days. I will not come back to ask you for this money. You can do whatever you want to do with it. But for that lockup period, you're going to pay me a higher interest rate than you would normally pay, right? So
And
you pay me.
what's the interest rate
So
normally?
normally, I mean, it depends on the time period and the macroeconomic fundamentals. But in this time where we're seeing interest rates that are doing single digits, we're looking at something in the range of between 5 and 7%. Again, if you look at some of the lesser capitalized banks,
Yeah.
you can sort of bargain for a higher interest rate because they are riskier, right? So they would want to incentivize people to give them money, so they would offer a higher interest rate. If you look at some of the more capitalized banks like GT Zenith, I mean, pretty much, I mean, just in a manner of speaking, they don't really need your money per se because they're well capitalized. They have a very strong and broad deposit base, so they will not offer you as much of an interest rate as. And besides, everybody knows these banks. I mean, they are really sort of
No,
the heavy hitters in the market, right? So
what about, exchange rate? So someone in America or Britain says, well, okay, but the exchange rate, the naira keeps devaluing. What's your advice there?
So again, it depends on where you're sitting. If you're earning in a naira asset, right? If you're earning in a naira asset and you're spending in naira, right?
Yeah.
You're protected in a sense from the foreign exchange devaluation. I mean, not directly because obviously, the exchange rate translation will lead to inflation, and the value of your currency eventually drops. If you live abroad, for example, and you're earning foreign currency, USD, pounds, whatever it is, Canadian dollars, you're also protected because for many economies in Africa, our currency is basically one-way traffic. It just slides down against the US dollar because we're not really exporting, we're really importing, and we're spending higher amounts of money to import. And we all know that the naira, for example, is going to depreciate, right? So because you're earning in a naira asset, if you're earning in a naira asset and you want to protect yourself from that potential slide from exchange rate, it's wise to convert your money to another currency or something else or an asset which is a hedge against that potential slide that's impending, right? So that's that. So it depends on what you're earning in. If you're earning in naira, if you're earning in dollars, if you're earning in pounds or whatever it is that you're earning in, that's really very important for you. If you look further down on the spectrum, you also have merchant banks that offer fixed deposit. They offer slightly higher rates because they are not as capitalized as the normal deposit money banks, but they cater to the HNIs, high net worth individuals. And you also have microfinance banks and the likes. Then you can also invest in commodities, right? So the commodity landscape here in Nigeria is sort of divided
What are
into.
commodities? Please, again. Yeah.
Sorry, I'm just the force of
Yeah.
habit. So commodities really are a type of investment. Commodities really are commodities, right? So gold, silver, agriculture, cocoa, soybean, maize, millet, wheat, whatever it is, right? So those are commodities. Those are different from, financial assets like, stocks, options, bonds, derivatives, and the like, right? So you can buy these commodities from there are two major stock commodity exchanges now in Nigeria. So there's the NCX Commodities Exchange, there's the African Exchange, FX Commodities Exchange. You can also buy commodities from these agri-tech providers, and I know there are a number of them that have come up. And these
Please help me
agri-techs are
type
just.
them on the chat when you're.
Sure, I will do that. I will do that. I mean, there are a number of them. There's Farm Crowd, there's Agriport, there's quite a few of them. I'll drop that shortly. Then you can also invest in dollar-based investments, right? So there are investments that you can buy if you want to hedge your money from the potential slide in interest rate. I'm sorry, in the value of the naira. You can buy. I think Stanbic has a dollar fund. FBN has a dollar fund. You can buy euro bonds as well. Um, Euro bonds are essentially a way to invest. Euro bonds are how a country. Um, Sorry about that. My kids are back. Okay, but
No,
Euro bonds
sorry.
are
Okay.
essentially a way for a country to borrow in a currency other than its domestic currency. Most of the time, it's the US dollars because that's the most advanced currency that is used. Then you also have assets. You can invest in Islamic finance assets. We have Sharia funds for Sharia compliant funds. You can invest in Sukuk. These are instruments that
Okay.
go by the tenets of Islamic finance. So there's quite a few. Sorry to
Yeah.
just to wrap it. Quite a few things that you can put your money in here in the market.
Please type these things as well, so we have them as well, just to look at and do our own research as well in terms of investments. If you can type on the chat, that would be great. Does anyone have any other questions on this, or also wants to add one or two things?
I'd like to add that hi sir, can you hear me?
Yeah, I can hear you.
Oh, cool. I'm a bit nervous that a lot of people on the call would get scared because a lot of terms have been mentioned, which could be quite intimidating. So I think we should try and break it down for the beginners on the call. That's my 2 cents. eBay and GB have been fantastic, and Razak as well. But I have a feeling that people will be a bit intimidated.
Okay.
Yeah.
Okay. So what's your advice?
Sorry, Samson. Let me just say something on that topic. When I joined the bank, when I started out as a grad, my manager taught me something that I thought has really been useful, and it served me really well. So I'll just share it on here.
Yeah, sure.
He called it financial bingo, but I think you can apply it to anything where you're listening to a conversation, and a lot of terms are foreign, but it's an area you're interested in, or either you work there, and so you're going to have to hear these terms again. And the way it works is, you listen out for these terms. Say ETF. I hear a term I don't know, and I write it down. You write it down, and you have a reference site like Investopedia where you can actually go to check what those things mean. But then what you do going forward, so whether you're listening to the news or anything, you have a list of these terms that you've heard in all of these meetings, and you're almost anticipating. So, okay, we're talking about bonds now. I remember we talked about yield when we were discussing bonds. And so you're listening out for, you're listening to the conversation, but you're listening out for the word yield because you've read yield and you know what it is. And well, when you hear 1, 2, 3, 5 of them, however many you can keep track of, you sort of yell bingo. You don't literally yell it, but what that does, or what that did for me and a number of us that were taught this, is it helps you stay engaged in a conversation where you're hearing terms that you're not familiar with. Because I do get what you're saying in terms of trying to keep it as simple as possible, but sometimes there is a need for you to call an ETF, because if you try to keep it as simple as possible and say, okay, we're talking about ETFs, but if you had to explain what every term was all of the time, you could almost do a lengthy call purely on definitions. So while we